Introducing X-Credit LP staking from industry-leading RWA loan collateralization platform Credifi. Earn 10% cashback in USDT after 90 days, with more rewards coming soon for X-Credit holders. Visit v2.credifi.finance to...
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 1 minute past midday here, making it 1 minute past 1100 UTC. A really big shout out to everybody joining the stream live today, as well as everybody that is watching on catch up. Also would like to say a big shout out to everybody. Had lots and lots of wonderful messages from a lot of you recently talking about the shows and how much you've enjoyed them, how much you've enjoyed the time that you've got to spend over at the Bird Nest with, basically my family over there, right? We're such a close-knit crew. And I just wanted to say it's been a real pleasure. We've had an influx of around about 1,500 new members recently. And it's just been amazing to get to know so many of you, so many of your stories. And I know that a lot of you tune into this show. So a lot of appreciation for you. And if you're not one of those people, then just as much appreciation for you guys and girls as well. So one thing I would like to do is I would like to give a really big shout out to our sponsors, BitGet, who sponsor this show, and therefore give me the ability to, be here with you guys week in and week out, as well as my family over at the Bird Nest, who are covering everything for me while I do this. If you do want to support the show, please do go and check out BitGet. You can sign up through our referral link that you can find in the description, get some unbelievable bonuses, come and trade with just one of the biggest, fastest growing exchanges who have the very, very best fees. So for someone like myself, I know we really cover a lot of higher time frame stuff on these shows because that's what most of you will be interested in, right? And that's most of you will have the access to swing trading or position trading, for example. As an intraday trader, the fees mean even more to me because we're dealing with smaller percentages. Therefore, a lot more of my profit gets taken up in paying fees, which affects our overall risk to reward. So considering that, if all of those things sound like absolute gibberish to you, then please do come and check out the link in the description for the Bird Nest. You can come and get all the education needs that you could possibly want. So where does that leave us right now? Well, quite simply, I've got an hourly chart up here on Bitcoin. Also, just very quickly, good morning to everybody in the chat. Nick, Duncan, Ozzy, Telvin Fu, happy Wednesday. Good evening, good morning to all of you, wherever you are in the world. We got people slowly starting to creep in, maybe because I am normally a couple of minutes late for these after prepping, basically coming to the end of the London close session before I jump onto these streams. So why have I got an hourly up here? What does this gap mean? What do these lines mean? Let's take a look. So I'm going to just zoom you out first of all to the daily chart. Okay, or actually let's start with the weekly. Weekly give us some really strong levels, right? And I basically keep the ones on the chart here that are most relevant. I'm very hopeful that we won't be going below 50k. So the 50,940 level you can see here is the chart. But looking at these lines and levels, they all have a role to play. But one of the easiest ways to kind of pick these off, so I'm looking at them in terms of well, to quote probably the person that taught me the most, or probably the two people that taught me the most about drawing the very best levels, USC and Trader Dante. Dante would say you want to see violence at these levels, right? Meaning that when you see that touch point, you want to see big moves away. You then want to see how many touches and how much time has been spent at a particular level. Now, weekly is very difficult to do. So you only want your real kind of key levels on a weekly. They start to come a lot more into focus on the daily. And I personally find it quite useful to really kind of scrunch the chart up. Yeah, and then you're looking for the interactions at these levels, support and resistance flips. How big are the moves away, right? So, for example, this level here, you see very powerful move away. This level here leads to a big move away. This level here, for example. But what we're focused on at the moment is recency. So that's just to give you guys some context. We also have this sloped resistance level here that if we go back to the weekly, we can see is anchored on this high. And then, people don't be afraid to change and adjust your levels, right? For example, that would have been, let me do it in a color that stands out, right? That would have been more of interest to me before we had all of this data, because I've got 2 clean touch points here, right? Then you can see deviation, right? This one, it's still a very relevant level, this one. You can see how well that interacted with it. But as we get more data, don't be afraid to change your lines. And the reason for that here was because of how clean this was. So this level here, we barely deviated this one, but these provided pretty much absolutely perfect touches. And then we can see basically all the other times that prices engaged with this level, either ran it or, basically these will be on lower time frames of swing failure patterns, right? Most of them anyway, but on this time frame, you're looking at a trend line resistance. So then when we move down the time frames, we can still see the relevance, although we have more data. What we were concerned about when we were coming into this level here was that, sentiment was running very hot. People were getting super bullish. Beautiful reclaim of this resistance level at 64,802, which has played a really, really pivotal role in our trading on Bitcoin. Now, the problem is we had this sloped resistance here, right? And we'd also taken out a key set of highs over here. Now, if you ever just focus on the charts, just pop some of these bits away for a second, get that up to the top here. We hide them away and forgive the little squiggles that are over here. We're going to deal with them in a moment. If you just, if you scrunch this chart up and you really kind of focus on, we're looking at these expansion legs, right? Now, what I mean by that is you set a low, price expands high, you then set another low to a high, to a low, to a high, to a low, to a high, to a low, right? Just focusing on this section here, right? And I'm going to move this to one side. Now, within this, you have these smaller lows, these internal lows and internal highs, all right? So this is an internal high for this. This is one expansion leg. This is another. And this is what kind of makes up the key of market structure, right? Now, what I want to talk about here is how you want to be cautious when you're approaching these key levels of liquidity. So let's draw a few of them in. Why not? Let's stick with our teal color, yeah? Obviously, we haven't taken this one out yet, but it doesn't mean that it's any less relevant. You could call this an internal one or external, depending on the corrective move. But what you want to do is you just want to think of it in a cleaner way. You want to just focus on the key highs and lows, right? So when you're kind of in a downtrend like this and you're looking around, you're saying, am I going to take this high here? Am I going to take this high here? Yes, there's an expectation from an intraday perspective that we see some kind of reaction here, or here, for example, right? But if you draw these type of highs in, brilliant liquidity targets, by the way, on an intraday basis, right? But just looking at this here, this one's a little bit of an outlier for me because I really like this as a high, right? Like compared to that little one that's in there, right? Why? Because look at the kind of clean V shape that we have here. Again, look at the reaction. Yeah, so when price gets to this level, it's got an important decision to make here. Why is it a key level? Because look at the selling power that came in there. Bulls tried to move the market up from here. There was a huge reaction to the downside from here, meaning that for me becomes a key liquidity pool. Now, what I'm watching for when we engage with those liquidity pools is how price closes or how it engages with the level. Strong close above, you'll hear me use that term a lot. It means a big bodied candle where there's a lot more body than wick. Then look at this retest. Price tries to get below him. SC was someone that used to really, really kind of stress this in the early days when we were doing this on like MetaTrader, right? Which is that the bodies tell you what price has achieved, yeah? The wicks tell you what it tried to achieve. So what price tried to do here was drive itself all the way back down. But the buyers were like, absolutely not. I'm going to soak those up. I'm going to take those. I'm going to fill those bids. Thank you very much. And then we're away. So when we're looking at interactions at these levels, it can really tell us a lot. So look at this one here. I think if we look or take this example, right? Now, what happened here? Look at the way that price got bought up here. We then had this bullish engulfing. Now, this was very sneaky, right? Because we had this bearish engulfing come down. Now, what you should do technically, and my good friend Bass will always go on about this, is really when you see these type of candles, yeah, with or against the trend, it can be quite handy to look for a secondary candle. For example, this candle here is a bearish engulfing candle. This candle here then really gives us confirmation, in my opinion anyway, certainly how I look at the charts, followed by the fact that we inverse this bullish gap, that price is seeking liquidity lower. And when I look lower, yes, I could look at this low and I could say, oh, hang on, price has taken this low, maybe this is going to react. It's like, okay, fair enough, but you don't often see market structure, right, that will do like, this, come into there, and then what's it doing here? A little one up, a little one down, and up. Just all looks a little bit messy. But even if you do make an allowance for that, just watch what price does around the level. This for me is a much clearer low, and this one ultimately even more so. So the same as when we reclaim this level here, we get the bearish engulfing, but then we get this doji. Price then reclaims this level and retests it, showing that it's received acceptance for buyers. Okay, so then we're looking here and saying, okay, where's the next key liquidity? It's here. How does price react here? Well, we've already covered this. We get that strong close above and price moves up. Now, you might say, yeah, okay, mate, but really, you're aiming for this level and it fell short here. Why? Well, quite simply, we don't ignore these highs and lows, right? And from here, it should be really easy to see, okay, look, here's the high, price has come down, and here things are looking good, right? Holding a nice bullish gap here. So I'm just going to do this in green to here. Holding a bullish gap, price goes up. We always target the next liquidity. And then level to level, we're asking ourselves here, what is price doing here? Is it gaining acceptance above here? Yeah, so close above, then you're looking for a retest. You're looking to be a buyer on the retest. You're just seeing these long wicks come above and failure to get acceptance once you close below. That's when you're saying, okay, move to the lower time frames. Let's get some context here. Or let's wait for something like this, which is our gap inversion, meaning bullish gap offered support, closed below, turns to resistance, price sells off. So very, very, very quick thoughts on that here. So when you're looking at a chart, often, if you're really searching for something for price to engage with, or you're having to tell a very convoluted story onto why you want to take a position somewhere, you're probably not waiting for the higher probability areas, right? So let's get rid of that. And now let's say to ourselves, okay, why is that? Hang on, deleted all my current stuff. So why is that in any way relevant? Well, first of all, if we're looking at gap inversions, when you look at the interactions with these key levels, we've already given a few examples there. These gap inversions like this one here, it's a bearish gap, price closes above. Look how it retests this, especially if you then get a bullish gap set in its wake when it's closed above. These can be really, really good precursors to market structure shifts, okay? Like this, for example. The premise that I had when, and this is released in previous Bitcoin reports, you can watch it on the previous trading shows as well, was that this reaction here, this pump out of this level was quite weak, yeah? When we set this, we set two dojis here, then we had this big drop. Now, it's my belief personally that the news has been a major catalyst with that. The very, very unfortunate escalations in the Middle East, in my opinion, between two really, really beautiful cultures as well. So it's very difficult to stand on the sidelines with this, but typically, the people that are making these decisions to cause this humanitarian crisis in the world are not the ones that suffer it. Unfortunately, the innocent are. So nothing but blessings for anybody that's caught up in any of that. But that's about as politically driven as this show is going to get. All right, I think everybody has their own opinions on that, and it's probably best most of the time that they stay that way. However, we see the big drop here, but when we got this initial drop into here, bear in mind this is more the news catalyst, right? When we got this initial drop into here, I was a little bit concerned because look at the size of the body. People very, very quickly forget with candles, right? To just look at the candles. The wicks tell you a lot. Look up here. Look at the downside wicks here, yeah? Other than this one, which got a big pullback here, then that big expansion higher. When you look at large expansion candles like this, watch what the following candles do. You really want to be seeing, like, look at this here. Two examples. This downtrend, decent body candle, a little bit indecisive, big body candle. This is a bullish pin bar with a short nose, but because it ran two key liquidity levels, right? So when it ran those levels here, we saw that corrective move. That's fine because it doesn't always look as clean as it looks on your charts, right? That's price moves like this, right? So this up move here is this candle here. You need to see more than that. You need to see price close above that, in my opinion, before you're looking to change delivery. So then big body candle, bit of a doji, another big body candle, another big body candle. All of a sudden, see when we set this slightly a larger bodied bullish candle here, this should be your first indication here after this long downside wick that we've seen some absorption. Then when you look left, you're almost certain to find a key level like this. When you show absorption like that, then you can say, okay, maybe this is the start of a trend reversal, and then wait for confirmation. Anyway, why is all of this relevant, and why am I just diving straight down to an hourly chart? Because I just said to people this morning on Twitter and people over at the Nest as well, that on an hourly scale, especially looking at this from an intraday perspective, this gap means a lot to me. Now, I didn't unfortunately get the close that I was really after here. So I said, we close below this, yeah, then we seek liquidity lower. Now, the first liquidity that we seek is the wick of the candle that we've left here. And I really, from a bearish perspective, this is a very, very good looking candle, right? Long downside wick, leaving us a bearish pin bar with a very short nose, also known as a bearish hammer candle, right? So what does that then mean? Well, it means that my expectation then this morning session was for price to trade lower, okay? It's got that, move to lunchtime here, obviously still the morning session UTC, and then for price to sell off lower. Now, the one concern I have with really chasing these targets, so these are the key downside targets here after we've closed, after we've taken out this, is that, price is very, very low here. All right. So what we need to do is we need to zoom out and say, okay, well, on a daily scale, where's the key liquidity target? And there's two here for me. There's this one down at 57,494. Doesn't mean that we're going to flush all the way down to that. We're going to decant the daily, the 4 hour, etc. But there's also this order block here, right? Now, I get asked questions on order blocks a lot, and I think actually they're very open to interpretation. One of my very early understandings of order blocks, which served me very well, especially as areas of mitigation, was to wait for these structure changes, these order blocks that lead to structural change, yeah? And then that's the allowance that you make for the order block, right? So, for example, if you're looking for these here, you're looking for the up close candles that led to this break of structure here, or the shift in structure. So the way that I used to look at them was if they have abnormally long wicks, yeah, like this for me is a little bit too long, then I favor the bodies, right? However, again, it's up to you to study this, but technically this whole area here could be an order block, right? I need to just zoom in a minute actually and find out if that is very hard to say, right? If that's probably more of a bearish doji than anything. So I would make an allowance for, say, that if you're allowing for all the bodies. The idea is that this area then provides a point of resistance. Now, over many years, and we just released that video footage actually, still very, very relevant. However, over the years, I've started to look at it a lot differently. Okay, so over the years, I look really for these key kind of support and resistance levels and say, okay, price engaging with these, for example, this move up here or this move up here, these provide very, very key areas for me. All right, so this up close candle before price broke down, or people might make an allowance for these up close candles here in the latter move. For me, this supersedes this. So this is just important because it's the origin of the move. But I don't really allow that much for the wicks. I like the flat ends of the bodies. Yeah, so if I'm looking for a bearish order block, for example, yeah, so let's use this as an example here. We have a sweep on liquidity, price engaging with a key resistance level here, right? I would take the lower part of that because these are consecutive candles, and then I would run it across. And depends if that is or not. If that is the candle, then you can allow for the wick here as well. And then you're just looking for these interactions. When price comes back to here, if there was a lot of sell pressure here before, then why isn't that there again? So with that in mind, and you'll see these order blocks on my chart as thick black lines, this for me was a really key area of support. Why? Because we're coming into this order block, yeah, that's in here. This is where the buyers stepped in to fuel this move higher. By the way, sorry guys, if you can hear any noise, we've got the roads being dug up outside here in London at the moment, hopefully for some new fiber optic, but we will wait and see. So as price goes up here, we then see this corrective move down. We've got a key support level here, yeah, at 62.38. That's 60238, okay? And then we've got this order block. So if we're going to bounce from somewhere, this is the area. So why would we want to be selling into this? That's to give you the context for when we're back on the hourly, yeah, that says, okay, no problem, but price can still be pushing lower, right? If it's not, if these two key areas have failed to catalyze that reaction, yeah, and for all we know, price could be doing this, setting a higher low, getting ready to shift or break market structure to the upside and pushing on. That's fine, but I don't know if price is going to do that or not. That's an okay reaction. I don't think it's amazing. So as we now jump onto the lower charts, what has this told us? Well, using the same principles, if these down closed candles here represent the order block, then I need to see this level closed above. We've not been able to do that. The sell pressure has been too great. In fact, what happened was we got a sweep of liquidity here, and then price ultimately sold off. Now we've inverted this hourly. We invert this, by the way, by closing below it here. One of the other things that I try and look for as well is an equilibrium, okay? So just drawing a Fibonacci across this, you know, price starts to close below this. It hasn't inverted the FVG at that point, right? It's purely driven into it and rebalanced it because the wick, okay, has been drawn back up into the box. It was this candle here that closed below it, meaning that I'm now looking for lower prices. And look here how the equilibrium, how price draws back up to this to try and gain acceptance above it, but ultimately sells off. The other thing you can see here is this swing low also acting as resistance, because that's where the buyers stepped in before. Those buyers have now seen an early rejection here. Positions have either been stopped out or they're mitigating risk, hedging, or possibly in a little bit of drawdown here. So when they return to this line, that's where you then see the sell-off. So how do we then package that? All right. So in here, I'm saying to myself, okay, I want to use the 15-minute to frame this. Now, I do prefer to trade around high volatility zones. Some of you will know them as kill zones, right? If you've studied, say, ICT, for example, or other people that use these zones. Basically, mine are slightly different. They're a little bit longer, and they're calculated around the idea of when the highest volatility and volume is coming into the markets. This is the London session. This over here represents New York AM, which starts for us in about an hour's time. So what am I looking for here? Well, I'm looking for confluence, right? I'm looking to say, okay, well, you know, at this point, we're looking down, yeah? So that's from here, from midday. So what is going on at midday? Well, quite simply, are bullish areas being respected? No. This should have been a bullish gap here. When price set it here, price closes below, it becomes an inversion gap the same way that this one does, right? Now, as we close below this one here, we know we have an immediate liquidity target of here, but what we can do is move to a lower time frame. Now, I know this is probably a little bit low for most people, right? But just to kind of give you a little indication of how I would be looking at this, and then I'm trying to be a seller in here. I know where I'm wrong, yeah, because I've got the equilibrium and I've got the swing high above it that also sits outside of this block. It then means that if I can get a retrace to here, before we take out this level, I can trade into this for a 1.36R. Now, at that point, I am a very risk-averse trader, so I do move my stop loss to entry here, take enough to cover the fees, because then my expectation is for price to move lower, but where to? Well, this is a key low here for me. Why? Because of the reaction. This is the move that shifted structure. We came out of this consolidation. This is the impulse move higher. This is the corrective move lower. This is where buyers then accumulated and caused this large move up. So what do I want to know? Well, I want to see where the bottom of that wick is, just so that it gives me an indication of where we might see a reaction. So we can watch what price does here. Now, at this point, promising, because we've had a strong close below. So then my eyes turn to this level, okay? Personally, I like to trim some profit when I'm on my way down through these moves, but I also like to secure risk early. So if we come in to get taken out here, I've taken enough to cover my fees on this particular trade, all right? Which would probably, depending on your fee structure, probably around 10-12% of your position, because we're dealing with very small percentages. Now, obviously, you have to trade this, but you can just take the time frames and move them higher. It's just quite a nice way to be able to nibble at some profits at some areas where you're not so confident. And the reason I'm not so confident here is because, like I said to you on the daily, we've had a very off to this point. Price is probably due a corrective move. Look, You have these big pumps, price corrects. You have these big pumps, price corrects. Yeah. On all of these, look at these corrective moves. Price just doesn't move in a straight line, right? So this is either an area we can reverse from. We've caught a lot of people offside here, a lot of people getting super long up here, a lot of liquidity to be taken. So this is either that next flush that we were looking for price to really have this resurgence, or maybe price needs a little bit lower. I don't know that. Nobody knows that, right? Maybe a few select people that have the ability to move these markets do. But that's certainly not me. And I doubt very much as I love you all, it's anybody listening to this show. If they are, you can reach out to me and my family over at the Bird Nest. But no, in all seriousness, we just need to find these areas to make these key plays. So while I don't want to short into this level on a higher time frame, on a lower time frame, you know, I'm happy to do that because I'm playing the momentum that the market is giving us, and I can take these nibbles, have a good idea of where price is moving in terms of liquidity, and then I can step away. Okay. Right. Let me just catch up with a few messages from you guys. Sorry, I've been really ignoring the chats over here. Erica, hello, my friend. Stevie Boy as well. How are we doing? So could you sum that up as a step-by-step process? Raki, yes, certainly, mate. I'll give you what I'll run you through an asset. We'll pick one off the charts. Yeah. So if anybody wants to give me one, yeah, rubbish truck. No, rubbish truck backing up outside. Some twat in a bulldozer as well with like the loudest reversing lights you've ever heard in your life. And basically they've been here for about 10 minutes a day doing F all, buggered off for about 2 hours for lunch. Now they're back right in the middle of my live show. Again, doing F all. Noise there was there for about 5 minutes, and people wonder why the UK is turning into a third world country. Digging up the roads, exactly right, Stevie Boy. Tyson, good morning, my friend. So, feeling groovy, love that. And Top Veres as well. Good morning or good afternoon to you wherever you are in the world. So a step-by-step process would be handy for you guys, would it? Absolutely, let's do that. We just need a ticker, yeah? And we'll take a look. So first person to shill me an alt, a coin, or an asset that they want me to take a look at, please let me know. Yeah, exactly. Aussie, you basically, I think what you guys realized a lot sooner than we did is we sent the wrong group of people over to Oz all those years ago, right? I think we kept all the wrong uns and and sent you guys off to paradise. So God bless you all. Enjoy it out there, mate. I've got a lot of expat friends that live out there, which is brilliant. ND, awesome. Love that, mate. Thank you very much. CG selfie. Sorry, mate. Is that a coin? Probably need something that's got a little bit of decent liquidity behind it as well, right? So we can see these moves. I'll try and keep them on a higher time frame for you, right? But just so that we can have a quick look. Let me just clear some of this up while we take a look. What have we got, fam? I know only certain people's comments come up on here, so if you are just pinging them on something that I can't quite see on my chat that's coming through. Yeah, awesome. I need a ticker, mate, please. A ticker would be awesome. Can do gold, but probably more of a crypto fan base here. So if we can look at something in that respect. By the way, just to finish off the analysis here on Bitcoin, if we don't get this flush lower here, yeah. Ah, well done, mate. Sorry, Raki, I missed that. We'll do SUI, yeah? We'll do SUI and FTM, yeah? There we go. SUI. FTM. And if CG does come back with a ticker on there, we'll take a very quick look at that as well. We got about, we can stretch this out to another 30 minutes if we need it all. Right. So, yes, well done, mate. I don't know how I missed SUI, but thank you for the reminder, guys. So with this one, by the way, if we close back above this now, it completely invalidates this for me, but we do need to be a little bit careful here. Oh, thank you, mate. That is the ticker. Cheers, buddy. Apologies. We do need to be careful of this gap here as well. Just a funny feeling we run in, tag into this gap that we've left now, and then kind of flush lower. But again, look, close above this here, and I think we push up. There's very little until we get to this gap here for price to reject. Yeah, I know this will represent higher time frame gaps, right? But look how balanced that is. You know, so we're focusing back up to this area, which could be the underside retest of this level, and also the order block. So let's get SUI up, shall we, with our partners over at BitGet. Wow, really nice, clean levels here on SUI. Love, love, love to see that. So I would probably add in that there's probably a level here as well. But I would want to kind of finesse that daily. Yeah, I like that level actually. Key reaction here. Price didn't quite do it there, but look at the close above the retest. Fine, it didn't go anywhere because it failed, but then look at the underside retest here as well. I could move this down for the purposes of line of best fit, because you've then got 1, 2, 3, 4, 5, 6 interactions with that. Whereas here you've got 1, obviously 2 close through, 3, 4, 5. It's kind of 6 and 1/2 dozen the other. I'm going to keep with this one, and I'll tell you for why. Because it is previous all-time high, right? So that definitely has some significance there. And because we're kind of driving up into this level, but we can see here, right, really getting kind of like a key rejection there. So now if I move to the hourly, yeah, so when we set these key support resistance levels, we're then putting in an equilibrium, right? So basically this becomes our range. Prices closed in the range, pumped to the midline, right? Come back, found support, pumped to the midline again. Closed underneath, zoom in for you guys, closed underneath, retest down to the next area of support. Look, can't close below it. This is your indication that price is ready to move higher. So right now I'm looking to be a buyer on this at 1.8410 level here, okay? Now, I'm not saying we are definitely going to get that or that we definitely bounce it, but it looks like a damn good area. Now, what else do I want? I want confluence, okay? So it means that I want to then find out where my gaps are. Where's price going to react? Price very rarely just reacts in the middle of nowhere, right? This looks like it's reacted in the middle of nowhere, yeah? But actually we took that swing low. As soon as we recovered it, tells you that the buyers have stepped in, right? This here, right, looks like it's reacted in the middle of nowhere. There's just the tiniest little gap down there. Now, nothing in trading is perfect or ever completely certain, but when you look at these things, right, let's say, for example, you have this would be a classic trap for me for the way that I trade, right? And I will get on, make sure that we kind of cover what we were just talking about, because I know I can go off on a bit of a tangent. But stuff like this for me is important. Look at what we're looking at in the hourly currently on Bitcoin, right? This could be an hourly, a weekly chart, whatever. Price is fractal, so it moves in the same way. Now, when we closed below this here, right, my expectation was for price to take out this liquidity, yeah? Because we've had that strong close below. This all of a sudden then becomes an inversion gap. Now, I'm wrong here. So say I get stopped out. However, when we close back above this here, yeah, this then confirms it back as support. I wouldn't then use that moving forward, but what I would say is that this was a deviation, like a support resistance level, right? This was a deviation, and actually, if you look across here at something like this, you kind of got an SR level here as well. Okay, it's probably actually a little bit higher than this, but you can start to see the point here: deviation underneath, retest, deviation, retest, sell off, close above. Then when we get back above this level, we're then showing strength. So when we close back above here, I know I can take this on an intraday basis to here, hold it there, stop secure, and then trading it to here. Then I see how we react at this level, the key support resistance level. This strong close above it just tells me that price wants to run hot. I'm either looking to be a buyer here because I've got a good risk to reward, yeah. After that candle close, I can find a lower time frame stop below this level with an expectation that we might touch a bit. If we do, I would expect a strong reaction off. Or it then gives me an opportunity again here saying, okay, well, we've closed underneath this level now, so I'm favoring shorts. As soon as we recover it, I'm a buyer again here. Okay, that's why having these key levels is so important. Let me just write down selfie as well for CG, because he or she was one of the first ones in there to ask. So, and actually, you know what? We probably made 15 minutes to run through a few more. So what else did we have? We had near. I've already got FTM. And we had TAO. Okay, so we're going to leave it at SUI, FTM, selfie, near, and TAO. Just going to finish up this bit here and just do a very quick top down for you all, right? So what makes these levels important is you're looking for touch points and interactions. You start on a weekly chart, right? And on a weekly chart, these are the thicker lines here, right? I'm just trying to line these up with areas of best fit. So this low, strong reaction, strong close above, retest, support, deviation, support, close below, sells off to the level below, immediate rejection down to the midline, resistance, close above, retest, sells up. So look for those SR flips. Now I then move that on to a daily chart, and then I look and say, okay, you should be able to see when they come into these key levels, you see that big reaction, big reaction, right? Now you have to ignore the thinner lines at the moment because they're made on the hourly. But with these thicker lines, then when you see price stick to it, look what happens. Underneath, retest, strong reaction. So look for the amount of touches, look for how price is engaging with them. And to quote, I think probably the best in the industry, very close between him and SC. I know they've had a big influence on each other over the years as well, but Dante would say you want to see violence here. That's the best way I can explain it. And sometimes they don't look that clean, but then you're looking up and you're saying, okay, yeah, but look at that. And then focus on recency as well, which a lot of traders see as a dirty word, but it means a lot to me. Meaning that if I'm trading this here, then this makes the most sense. Strong close above, support, big sell up. Close above, doesn't come back, sell up. Close above, support, fires it up. Where to? Our next thick level. See how price is just moving and engaging within these ranges, yeah? And even though that was a quick pump up to there, it's still within this. And price is now still within this range here, right? So that's what we kind of need to be a little bit kind of not careful about, but we just want to be aware of it, yeah? Because people are very, very happy to long into resistance. Doesn't mean that we're not going higher here. It just means, look at this candle, for example, on the daily. Big flush up, big flush down, doesn't really know. Caught a really nice bid today. What I would look at here is I would then look at the order block and say, well, this seems to be doing its job. Down close candles becomes valid when we close above the body here, wick into expansion higher. And then I'd be checking to see if we've taken out this high yet, which I don't think that we have. Highs are 93.18, 93.16, very, very close, but not quite there yet. So then finesse them down on the hourly. Look at the hourly chart. Fine, this black line's the order block, so you can see when you're below this, just wait for the reclaim of it and price comes back up, right? Seems really simple. You've got a key support level here. What happens? Deviation, price gets back above, perfect retest, buyer. Price comes into this level here, back above, perfect retest, buyer, right? Now, the thing we're looking for here is I would have been looking to be a seller here. Why? Because we've had this test here, we've broken back down, and this retest here, and this pin bar candle tells me that price wants deeper. Now, probably been stopped at entry here or taken a very small bit of profit because price then reversed. But then I know when the strength steps in, well, why should that step in if we've already taken liquidity and broken down below a key level? Tells you that it wants higher, right? And like I said, I'm a very big fan of splitting these ranges, yeah, or splitting these levels and making them ranges. And look at how price reacts at the equilibrium. Rejection, close above, retest, sells up, deviation, back above, goes to our key liquidity level. Little bit messy through here, but so is the price action. But what you can see from the long downside wicks is how price is getting absorption here. Then rejection, close above, ultimately up to the next level, okay? So that's a very, very quick rundown on how I would look to do these levels. But basically what I'm then looking for here is where's price going to react from? And we can see that we've now had this move down to our support level and moved down to our fair value gap here, okay? So let me see, I don't even know if I've put these all into a, yeah, okay, so weekly levels, H1 levels as well. Perfect. Okay, and then just basically label them all together and save them on your chart so you can turn them off and on as you need to. So this is where I want to be a buyer. What happens if we get an hourly close below it? Then I think price is probably looking for liquidity lower down, starting with this low, also this gap here. But then if we violate and close below that, then there's this low here and this low here. So that's my expectation. No, expectation is the wrong word. That's my plan. Until we get that close below, I want to be a buyer here. Why do I want to be a buyer here? Because seller stepped in here, shot the price down. Seller stepped in here, shot the price down. Price closed above, buyer stepped in, price pumped. Price closed below again here, sellers stepped in here, right? Look at the sell-off from the wick. Sellers tried to step in again here, got a small correction. Price comes above, closes strong, and fires up to find liquidity above this high. And I think ultimately above this. Now this has been left as a failure swing. If we just zoom in really, really close, I think we should be able to see that price just hasn't quite taken that. Yeah, see this gap? That means that that's a failure swing, not a swing failure. Swing failure is when you take a swing high and price breaks down, yeah, or you take a swing low and price shoots up. It's like a liquidity sweep. What we're looking for here is a failure swing, meaning there's been a lot of liquidity left there above there and liquidity here, making these equal highs and a really key position. Maybe we don't go for it now, but what my current thinking is that price does this. My current thinking changes, as I said before, if we violate this gap and close below it, and we close below this resistance level, support level, sorry. I would need higher time frame closes to invalidate this level, but looking at this on a shorter time frame, which is my area of specialty, that's what I would be looking for. So before we rip through the rest of the charts quickly, let's see what our framing turns into here on the 15-minute. We can see we've got an aligned gap here on the 15-minute as well. We can see the initial reaction here at our support level. I'm now looking up to say, okay, well, where's the nearest place that price can run to here? And all of a sudden, I'm really falling in love with these equal highs. Yeah, we've swept liquidity below this low. It's a very important low because it's a gap low. Yeah, or for anybody that studied under Michael ICT, we know it as an intermediate term low, meaning it's basically, there's more to it than that with his teachings, right? But for me, I'm looking at it much more like a liquidity pool because it resides within a bullish gap. See this gap here? That bullish gap there is designed to support price. And we can see exactly how it did that here. Now it's been rebalanced, but look, price broke away, left the gap. Buyers stepped in, price pumps up. There's an argument that price is still reacting to this level because this level has yet to be closed below, which is why in 2 minutes 37, I think if we reclaim this level and fail to close below it, it gives me even more bullish intent, okay? Now, looking at this on, say, a 5-minute, what could be our early signs of resurgence? Well, quite simply, on the way down, what do we look for? We look for our bearish candles, which become our bearish order blocks, the up close candles. We look for them to our resistance. So what happened? All these consecutive bearish candles, buyers stepping in, super, super pumped for higher price action. What happens? Comes down, takes them out, whether their stops were here or here. If they're waiting for price to return to this level, as we get here, closes below, returns, they accept that the position was probably wrong, and they will probably close their positions out, meaning that they've turned from buyers to sellers. We then see the retest of this, price sells off. Where's our next up close candle? Here. So that, as we can see, is now keeping price suppressed. We do not have a bullish close above that candle. Yeah. Where's the next candle? Well, here's the next one here, right? So we get that. And then we've got another one here. So now what we're seeing is how price is getting suppressed, how the buyers, are failing here. So the sellers that are gaining control of this, look at the white candles or your green candles, right? And then look for how price is reacting. Close below, we look for lower liquidity targets, okay? Now, why is that relevant? Well, because the same is obviously true in reverse, which means that we're looking for the down close candles, the bearish candles, to offer support. So I want to see a close above this on the lowest level that I'm willing to accept this, right? Which is 1.8510. So if we get a close above this, and I'm not suggesting you do this, but if we do, then you could argue and you could say, okay, well, where's the nearest place that price could reject? Probably this gap, but I think it's unlikely. A very small high here, but again, I think unlikely. I think it's more likely that we go for the clear and obvious liquidity, which are the equal highs, followed by this level here. And if I'm wrong, I'm wrong. But if we get that expansion, we get that close above like we get here, then it gives us an opportunity to get into a trade. We know exactly where our risk is because it's below the swing low here. And we know that if we're going to run it to here, we've got 1.49R we can reduce, or we can mitigate our risk, and then we can trade it higher. Or you could wait for structure recoveries, for example, right? That's also a good way to kind of get into positions. Follis, wonderful trader over at Chroma, a guy that I had the pleasure of meeting in Singapore, is someone that says this on his channel a lot. And he's a guy very much from a very similar learning background to myself, and another guy that's quite risk averse as well, actually, which is, he's much happier to not try and catch tops and bottoms. Yeah. He's happy to say, well, okay, if price is going to reject here, yeah, then give me some more indications. Here's a sweep. You can see liquidity's been taken and price has quickly got back below. Okay, so what else do you want to see? Well, you want to see price shift structure. I would call this a breaker line in the old system that I used to teach, for example, meaning that we're looking for liquidity sweeps at key levels. Yeah. Then for price to break down. Now, I would be a little bit more conservative with this. That for me is the structure shift here, right? But I think a lot of traders would, taking the clear and obvious, would make an allowance for this, meaning that this is where you're a seller. You know your target here because you've got your levels worked out and you know where the gaps are. So all of a sudden, you're either stepping in here, or like I said, for me personally with my system, I'd be looking, and this isn't speaking for Follish, I'm not saying he trades exactly like this, but what I am saying is that he's a very smart, experienced guy, and he understands that actually, rather than trying to catch tops here, wait for the market to give you the indication it's ready to move, and then hunt positions in here, right? Razoon, who trades with us over at the Bird List, wonderful trader, uses a lot of volume, TPO, profiles, etc. We'll do the same thing. We'll set out that value area, yeah? And then we'll say, okay, well, if this is the value area higher and price has now stepped back within, trading it like a range, this is where we'd look to go lower. So with this one here, if you're using those same principles, then I'd be looking for this high personally. Close above this, look for the retest in here, and then you can trade it up and you know where you're wrong. You're wrong below here. If price has the need to come back for that liquidity again and gets underneath, chances are that we're going lower, okay? So waiting for that confirmation can really help save you some pain. So what we're going to do now is we're going to spend the last 13 minutes ripping through the rest of those charts. So hopefully that gave some insight into SUI, all right? So now we are going to go to FTM next. Let's have a look what we've got here. So, okay, one thing I like about this immediately on the daily, right, is if you look at this here, this seems really quite obvious once you have all this data, obviously, right? Now, I look at these lines a lot more as liquidity as well, right? But they really kind of serve the same purpose. Rejection, rejection, rejection. Yeah, price meanders away from it here, which is absolutely fine. These lines aren't going to be perfect. You could be someone that's looking for a new anchor point, right? Here and saying like, okay, well, what does that mean then down here? Do you chase it the best line of fit? I just try and keep it really clean. If these are the key areas we've already had engagement, then I want to see how price reacts next. Why? Because look, price comes into this high, big sell-off. Retest it here, sell-off, can't get above, bigger sell-off, all right? So then when price comes into here and we don't see that kind of reaction, we get that close above and we get that retest, then for me, that's important. But the other thing to say here is this is looking a little bit, flaggy. Yeah. So these upwards accumulations, whether you consider this a bear flag, almost like a rising wedge, depends how you draw it. If you're just line of best fit or you want it to have the maximum amount of touch points, for example, then you could even fit it like that, right? Because look, touch, touch, touch. In fact, I think that's a really, really nice point there. So that could be, for example, a wedge. You would look for a breakout of that, a retest, and move higher. Anyway, I digress. I would always kind of refer to someone like Crypto Burb or maybe like Axel Kaibar, the real kind of masters of the levels. But then I'm looking here and on a daily, I just want to look very quickly and find the key SR level, which for me is around about here. Okay, why is it around about here? Well, not because I picked from that over there. I'm just looking at the recency and I don't have any. So as I look over here, I'm saying, look, resistance, price closes above, support, 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 closes below, resistance, all of this resistance here, deviation, price sells off, price closes above, sells up, finds very, very, very weak support here, closes below, ultimately sells off. So however you're drawing that line, and I would always recommend, you can move it around, just try and find the way that you get the most and cleanest interactions with it, focusing for me personally on these kind of support resistance flips as well. But again, remembering, Dante's great advice here, which is just look for violence. So for me, price kind of coming into this level, the fact we're sticking up into this isn't the worst, but I do want to see price above it. Yeah. And then in here, we can look to be, buyers. I think until then, there's a lot of liquidity resting under these lows that could be very tempting for price. But anyway, let's not get bogged down in that. Let's look at where we are and where we're delivering from. What I like is the fact that we've delivered from this bullish gap here. All right, nice touch point in here. We've moved up. The key order block that we still need to set and what's capping the market in that respect is here. Okay, these consecutive down close candles. Why not this one? Why not this one? Why not this one? Because they're all in the range of this. So I find this to be, say, like the master order block here. As longer price rejects from here in this level, chances are we need a deeper flush, all right? But we're then going to move down onto a 4-hour chart here. And if I want those first early indications of where price is going to reverse, I don't use logarithmic charts. No, mate. Very good question, though. I used to for a lot more of my kind of like longer time frames, or more investments, because it just gives you that kind of smoother look over time. But I just use regular, mate. So here now the same thing. This is just another big order block down here, right? So actually, as we look on the 4-hour, it doesn't really give me much information. What it does give me is, and I'm going to delete this for a moment, just because we know this is daily. We have to wait for the daily close. That we've swept liquidity below these lows, right? So what have we done? Higher high, but a lower low. Now, is this a lower high moving to a lower low? Oh, interesting. That might be my new leads for the mic. I'm sure they'll just put it through the door anyway. So as we switch here, are we now coming into this area and then looking to flush lower? That's the question that I'm asking myself. So the next question comes into, okay, what backs that up? Why would you want to be a seller here? Well, I don't want to be a seller here, but we're reacting from a bearish gap, right? Not the place to long. Like I said to you before, place to long was down here when you've taken liquidity, all right? The place to look short, or to look for a reason to be short, yeah, is when you've taken liquidity from the highs. A reason to be long is when you've taken liquidity from the lows, or when you're engaging with a bullish gap, for example. Right? Bullish gap. Again, it's crypto, right? So it's not always the cleanest. But as we look into this here, comes down, pumps, right? Small reaction here, pumps. So we've got these gaps supporting price. Now, when we're in here, not the time to short for me. I would have been considering it here, but it's not really the strongest close. But here, I would have been looking down to here until we close this, in which case I'm then looking up to these highs for price to run that kind of key liquidity. So with that in mind, I want to be a seller here with FTM while we're rejecting this gap. It's very, very clean. Now, we might only reject this gap. So we might do something like this, for example. We might only reject this gap down to here and then rip through this. But that is what I would want to see. All right. I would want to see price up, hold. We've swept this level. Then price has come back up, rejected at this gap. Then we've kind of come down. Whether we do that or whether this is the start of something deeper allows me to position myself in there on an intraday basis. So what I'm then doing is moving to the 15-minute to frame it. So what do I want to see on the 15-minute? Well, if I'm trading London, I want it to be above New York's opening price, right? That's New York's midnight price, yeah? So for me, that's 5 a.m., which is here. And then if I'm trading the AM session, I'm then looking for price to be above, if I want to short, the New York AM start, which is over here. For me at 13:30, all right? So we're kind of coming into that realm now. So this is an interesting time for me. However, like I said to you before, right, if we want to be short up here, even if we're entering on a 15-minute chart, you want to see confluence, right? So what's rejecting price here? Couple of things. One, liquidity sweep. Yeah. Two, we're in a big higher time frame gap. That's so important for me in terms of looking for confluence. And then what's this? Where's price delivering from? It's delivering from this bearish gap in here, right? Actually, excuse me. So we're delivering from a bearish gap. We've had an interaction with the gap here. Yeah. So that's a gap between that body high and that there. There's also another gap below here. But this is the important one, because look at the reaction here again. Look at the violence. Look at the impulse move off of this, right? It was strong. Then we can see the bodies respecting this, right? So this is a bearish gap overlaid on another bearish gap. We've now had a liquidity sweep on our framing time frame. We're above E-level here in New York midnight, which means we favor shorts from a risk to reward perspective. And then from here, I'm just saying to myself, okay, however you consider the low, I'm a very simple creature. I'm looking for a high to just be flanked by two lower highs, a low to be flanked by two higher lows. That makes a key high or low for me. But if I'm looking for something, and I know a lot of people would consider this probably the swing low here, right? Which I'm fine with. I don't mind. I would kind of be happy to take it higher up here, yeah, or probably more so from this one, because for me, the key thing here is that's the low that led to the sweep of the high. Closing below that here tells me that I can be a seller here. I can just, once we close below here, I can just put a limit order on here. I can take my stops above the prior swing high, because if we start coming back up here to sweep this again, chances are that we're wrong, and then we wait, we see if we reclaim this level, in which case we flip long, or maybe we get caught in a secondary sweep and it gives us another opportunity to get short. And then from here, I'm just looking for key liquidity. I'd probably, here it's quite tricky. I would want to see price kind of come down into these levels here, but we do have gaps here, so I'd probably be a little bit more risk averse. You can afford to, or I can afford to do that. I don't mean financially, I mean from a point of the percentage that we have in the trade, right? So that's something that I would look to do there. So what does that mean then when we kind of look up on that? Well, we're then looking for these levels down here to have action for us to be able to get long again. So I would immediately draw out this low and say to myself, okay, when New York AM session starts, yeah, that's 12:30 UTC or 13:30 UK time. What I want to see is this, right? I want to see the session start with an immediate drop, yeah? So something like this, right? So it comes up to here, then we get that drop below. Then on that recovery, yeah, let's say we're below, let's say that's New York AM opening price, we've got New York midnight price here, we're below both of them here. This allows me to be a buyer here. I know where I'm wrong, below this low. And then I look up here and say, well, where realistically is price going to reject? Now, we still need some extra data in here, right? But if that is the case, then I'll be targeting this high. But ultimately, the key high is up here. So now we're just going to we'll run over on the show a little bit, because I did say that we cover the others. I'm going to run through these very quickly. We're going to take a look at Selfie now. Here we go. So, maybe the one on CoinX. Could be this one. Let's take a look. Okay, so daily. Let's see where we are very quickly in terms of levels. So we can see that we've had quite a lot of kind of action from these levels here, I would say. Again, strong move off of here, strong move off of here, strong move here, strong move here, gets back above. This now, I would say there's a hope that this is a deviation for the bulls. It seems to be holding this bullish gap quite nicely. I'd want to see it back above this level around about 0.018631. You can see it over here. And then this long upside wick here makes a great kind of interim target, because it's also rebalanced this bearish gap, meaning that we should be able to have a fairly clear run at that. So I think if we see price close back above this level on a daily scale, I think we could really look to move up here. On a 4 hour, do I have any more information? Yeah, I got a nice sweep here on the 4 hour, right? So again, it's showing a decent reaction. I do think that in this respect, if we close below this, we confirm that as a bearish order block, and I think we move lower down to this low here, all right? And starting with this one, but ultimately moving lower down to this. As long as we hold above this, I see a bit of clear sky ahead, so I think we could look to move higher. What do I want to see to kind of encourage me into that? Obviously, it's a little bit of liquid, this being a smaller cap, but I like this reaction straight away. It looks like buyers have really kind of stepped in here below this level. I would typically, and we might need to do this on, say, an hourly instead, I would wait for the hourly close here if I wanted some more conviction, and I would wait to see that bearish gap here closed above. It would just give me that indication that price was ready to move a little bit higher here as well. So hopefully that gives some insight into Selfie. Now we're going to do NEAR very quickly. So looking at this here, we want to just kind of ping in. This is really that kind of clean, these levels here on NEAR. Probably something very tricky, actually. Maybe this perfect retest here, this acts as support, deviation. This is all a little bit messy, but actually when you kind of zoom in, you can see that, okay, close above, perfect retest, close below, perfect retest, rejection here as well. Now, We had this close above, price got this nice initial pump here. And then kind of reacted a little bit of, no offense to it, but a little bit of a nothing higher. Yeah, I would have expected price to kind of move into this. So again, I think, news catalysts do play a role in this. We can see as we kind of come through here into Tuesday, then we've kind of got that big drop. So that's absolutely fine. We're now back below this level. However, looking at market structure, we're still setting higher highs and higher lows. So my line in the sand on a daily will be this. As long as this holds here, I do think we could move higher. Also reacting here nicely at this order block. Not a high probability order block, but an order block nonetheless, right? If we're drawing in our order blocks here to look at the importance of them, right? Down close candle, price closes above, retests and away, retests and away. Next order block, these consecutive candles, what happens? Price closes above, retest and away. So when we set this down close candle, we never retested it. So for me, you can see how this is starting to stack up a little bit bullishly here. Now, to be extra safe, I think, if we close this candle and leave this gap, the best case scenario would be for price to close above that and then use this area as support, and then we can trade it higher. All right. While we're within this, it is looking like we could get something a little bit longer. So as we look in here, very simply, if this is your kind of time frame that you're looking to trade on, I would personally be looking for this. Here we just close below. Okay, so close below this here means that price, has a likelihood to maybe want to flush this deeper. So I'd be looking here down to 4.595 here, right? Then what I would want to see if price is going to have a resurgence here is I would want to see this candle closed above. Yeah, or these candles. The reason I'm thinking this, because you're like, well, hang on a minute, mate. You were just saying you're looking for longs here. Yeah, I am, because daily gap. But price can do this, yeah? Like this candle did. Price can do this and look like it's about to close and make everyone super bearish until it slips back inside the gap, leaving a downside wick. So it's important to realize when we move to lower time frames, yeah, that price could do something like this. Price could come like all the way down here and recover this on a 4-hour scale, and on a daily candle, that's just a wick, okay? So that's what I'm looking at the moment. We need to appreciate, obviously, there's liquidity below these lows as well. So if I want to finesse it further onto a 15-minute, using exactly the same principles, what I would have liked about a long here is we've taken out liquidity above the high and low of Asia's range, yeah? Now, again, in here, what am I really looking for? I would still want to see a close above this. Because, yes, we're making another order block here, but at the moment, we're still within, the range of this previous order block. If I wanted more confirmation to the downside, I'd probably say a 15-minute close below this, because then that's the up close candle selling off. As we saw with the previous up close candle here, we get back below, price normally pushes a little bit lower. So there we are on that. And let's finish on TAO. Again, not really a lot of really kind of very, very clean levels screaming out at me here, just because we don't have, really not got that kind of, for want of a better, but that real violent kind of reaction away from them, right? Maybe this actually, probably the cleanest area is this. But even that's not amazing, right? So you always be honest with yourself with your levels, right? So price closes above, retest, sells up. Deviation, retest, sells up. Price comes back below here, gets bought up. But as soon as it gets under, we see the underside retest, big sell-off. Now, actually, this looks like this is kind of flipping and this is holding a support. So I would look at this level here to hold 519.5. Again, on a daily scale, I'd be looking for this down close candle here that's formed for price to close above. Worked pretty well with the last one. Yeah. And you might say, did it really work that well? Yeah. Look, of course it did. That's the order block. Price closed above it here. So where do we expect price to go? To the next liquidity. Where's that resting? Well, that's quite simply above the swing high that was formed here, right? Perfect. So we now want to see, by the way, that's on that candle here, the down close candle. We now want to see the same with this, I think, to really get confirmation. Now, again, very, very dependent on the time frame that you're trading on, right? But as it stands, this weekly gap below here is supporting price. Close below here makes me feel like price is going to come and fill some of these inefficiencies on the way down. But as long as we hold above this level, then I think longs, still make sense. We've got a beautiful marker here as well on the H4 because we've got a bearish gap that's rejecting price here. So again, sets in line with this, right? If we then see a close above this, then that's when we start targeting this, and then we start targeting higher. This would be the opposite of that. That would be our bearish order block, price closing below that. We'll tell you that price is looking to nibble at the liquidity below these lows, and then ultimately this low down here, which I really like actually, around about 447.3, because it's again a low that's within a gap. So I think that's pretty clear actually on this one. We can see price moving down, as we said, hunting that liquidity that's within the order block here. But a move I'd quite like to see here for a recovery would be a dip down below this, below Asia's range, and even better if we can get down below these lows here and then recover this. That for me would be the ultimate play there. A flush, a recovery of this area here, and then price can kind of move up. Ultimately, though, if we look at it on our framing time frame here from an intraday perspective, we are now kind of setting lower lows, lower highs. So again, if we want to see a recovery of this, we want to see some of the gaps starting to get inverted. We want to see them closed above, or we can look to our order block here and say, okay, we can look and say, here's the down close candles. We want to see price close above them and then make a move on these highs. Ladies and gents, thank you so much for your time today. I really do need to go. Apologies, it was a slightly longer session, but just wanted to kind of cover that off with you all. The kind of really key takeaway from this is, and especially if we look at something like SUI, it's just understanding these levels, right? And then if you're wrong, don't be afraid to be wrong. Trading is hugely about being wrong. It's about just having a plan both ways, though, right? Like we said, we've got this gap here. Look at this on the hourly. We've got 52 down. See how the last candle, it looked like it was going to close below it. It just whipped back in, right? So now look lower. What price seeking out liquidity? It's seeking it here, right? That's a low within a gap. So we've got this bullish gap down here now. Nothing to stop price hitting that, recovering this level and moving up. The markets often move to trap people. How many people got bearish in this move when we started breaking these lows? Lots of them. How many people got bearish when we started to break this, right? How many people were bullish when we broke this, only for price to break down, people thinking, okay, I'll add here for price to flush out. You end up very, very often in these kind of liquidity game scenarios. And while this isn't the cleanest range, you can kind of see here, right? Range higher, midline, deviation, price gets back below, deviation, price gets back below. The midline of this sits nicely with our liquidity target. So if we don't see a good reaction here in a recovery, chances are price is kind of looking to make a move down towards this range low or our support level at 1.7290. Huge shout out to everybody for tuning into the stream today. Thank you so much. Please do, if you've enjoyed the show, please do come and support us. Come and grab yourself a free trial membership. Come and check out what we're all about over there. Please do come and trade with us over at BitGet with our partners. Awesome trading fees. You get access to our calls as well, and I will more than happily teach you my intraday trading system, which currently for our live trading sessions are 54.7 are up for the year. So if you'd like to come and learn how to do that with us, then just sign up through the ref link, let us know you've done it, and we'll give you access. Have a fantastic week ahead, everyone. I will be live with you again next Monday. You can reach out to me on Twitter. You can come and find me with the trading team over at the Bird Nest. All the stuff you need will be down in the description. Have a great week. Trade safe, and I'll see you around the nest.